Hello and welcome to this special edition of Young Turks, India's longest running show on entrepreneurship. I'm Shireen Bhan. Let me start by wishing all our viewers and the Young Turks community a very happy new year. Now 2014 ushered in a new government and the hope that India would get back to a high growth path. The turnaround has so far been elusive and 2015 will be crucial to kickstart the economy. But one space that's seen excitement and created headlines was the India startup sector. According to recent reports by Reuters and VCC Edge, the year 2014 was a better one for private equity deals in India, with aggregate PE investments at $11.64 billion, the second best in the past 6 years. PE investments in 2014 stand 9% higher in terms of deal value as compared to investments in the same period last year, and are 5% higher than the aggregate 2013 investment figure as well. However, the number of deals are down by 5%, implying that PE investors continue to remain cautious while putting in more capital into select firms. The year also saw venture capital and private equity firms chasing companies in the internet and e-commerce space, which garnered nearly 40% of the aggregate PE investments. Now, as part of our Young Turks tradition, we're starting the year with two special episodes. First, we discuss the year gone by, and then in the next episode, we spot the big ideas for 2015. Joining us today is Rahul Bhasin of Bearing India. Bhasin has been investing in private equity since 1997 and manages a capital pool of over $800 million. Also with us, Dimple, the director at Omidyar network. Dimple brings 21 years of in-depth knowledge in the financial services space, including more than 11 years in private equity in India. Rahul Khanna of Tr Capital, who was until recently the managing director at CANAAN Partners, a global venture capital fund with $3.5 billion under management. Rahul has 19 years of operating and investing experience in technology, media and telecom. Also joining us today from New Delhi, Parag Saxena of New Silk Route Partners, veteran investor. He has a track record of building organizations in the consumer services, infra, telecom and IT space. Appreciate you joining us here today. Let me start by wishing all of you a very happy new year. And Rahul Bhasin, let me start by asking you about the year that's gone by. Better year relatively for both private equity as well as venture capital, especially given the pain that we saw between 2011 and 2013. But the Achhe Din are not quite here just yet, are they?
I think we've moved from a situation of despair and to a situation now of hope, but hope translating into actual action, investments in the ecosystem, that's not yet happened. My own take is that given the structural issues that are there in the economy, it will take roughly 2.5 years to see a broad, all-encompassing kind of structural change in which facilitates growth, but you will see niches which open up sooner than that. Okay,
you're talking about the fact that you envisage a full-fledged turnaround only about 2.5 years from here. But you continue to invest even through the downturn, and I know this is part of your counter-cyclical strategy. Hasn't paid off as you might have expected, but no regrets on that front, right?
Actually, if you look at valuations, they've gone up considerably. So, if we were to do a simple mark-to-market, it's paid off considerably. But having said that, given our sort of time perspectives, we tend to take very long-term views on the market.
8 to 10 years.
Yes, and we have assets which we've been holding for 15, 16 years also. So, 8 to 10 years is average. Usually what happens is that if the economy is, below par for 2, 3, 4 years, it impedes our long-term returns considerably. So, though we would invest into a downturn because of our long-term perspective on India, and I hope that it's more reality than hope going forward. But I also believe that if you look at it from an opportunity point of view, India's got a historical opportunity. We were 25% of global GDP in 1820. We're 2.5% of global GDP now, and the fault of that lies only in the way we manage our economy. And I think that for the first time since independence, we have a right-of-center government who is not scared of saying that markets are good and markets work. Even though
we haven't seen them do anything spectacularly different from what the previous government has done so far.
Yeah, but even saying that openly, to my mind, is such a transition.
Refreshing change.
It's a refreshing change, though I must say that sometimes their own MPs contradict them, and that's a little frightening. But I guess any change process is always fraught with all kinds of 2 steps forward, 1 step back.
That's true. Dimple, would you agree that this is a process of 2 steps forward, 1 step back? But if you look at the picture in totality, India is relatively in a better position today, both from an inflow of capital point of view as well as what's happening in the startup scene in specific.
Absolutely. In fact, we are a lot more euphoric than what it just started out to be. I think the trend is definitely changing. The economic factors, both globally as well as in India, have been much more positive. The political front also, I think too early to judge whether it will be right or whether it will be 1 step behind. I think it's a step in the right direction. We've been seeing the euphoria of deals which have been also happening in this year, and we are continuing to see as to how the pipelines are looking, whether it is in the VC space or whether it's in PE space or whether even it is in the IPOs. The trend is completely continuing, and we are seeing a growth in GDP as well. I think we are a lot more positive than what we were before, and I think the euphoria is there very much.
Rahul, euphoria here to stay?
Yeah, absolutely. I think venture capital, like Rahul said, is a long-term asset class, and unfortunately, India had fallen off the map for a few years. And in a lot of ways, you raise money on the hope of a brighter future, and that is true in the case of both fund managers as well as investee companies. And both constituencies are now actively on the road. In the US, for instance, 1% of companies actually attract venture capital. They go on to contribute 13% of GDP. So I think you will continue to see that. And on the fundraising side, there is a renewed activity in fundraising for India. Many venture capital funds are now raising their second and third fund. And so the flywheel is turning. And I think most importantly, we're starting to now see the potential of real exits. Okay,
we'll talk about exits and the exit strategy in just a bit. But Parag Saxena, let me ask you this, because this was what Rahul was alluding to as well. The 2014 has been a year of growth capital and late stage VC investment deals. In fact, if I can quote to you what the managing director of Norwest says, despite uncertainties, the last few years have seen the build up of an ecosystem for venture funded companies. Would you say that in a sense has been the tipping point, the big headline as far as 2014 is concerned?
Yeah, I think that's true. It's simply because you get to a tipping point where you have an ecosystem of venture firms. Particularly in the venture capital area, you need syndicates to form. You need multiple people to invest in a company, because companies need different talents. You were bantering before we started about Flipkart and Snapdeal, and I think those kinds of companies essentially need different talents to come together. At least that's what's worked well in the US or in the UK, where venture capital is primarily done well.
You were talking about Flipkart and Amazon, and let's take that conversation forward, because that in a sense has been the big headline in 2014, the kind of valuations and the kind of money that these companies have seen come in. Rahul, Bhasin, you've decided to stay away from internet and e-commerce. I believe you've explored several possibilities but decided to stay away from a sector where everybody else seems to be investing. Why is that?
Not that we've stayed away. We've been systematically outbid every single time. So we failed to get onto the bus. It's not that we didn't attempt to get onto the bus. But having said that, I must confess that given my role as a global board member of Bearings, I've actually been actively involved in investing in the sector in other parts of the world. And we've got companies in our portfolio which we invested in end of 98, beginning of 99. That company is 1,250 times bigger in terms of revenue. We've done very well from it because several other people have come and invested in it. But when we invested, I had spoken to the management and said, this is all great, but when do you think that we could break even on a cash sense? And I was told next quarter. That next quarter still hasn't come. So there are several plays. I mean, it's not, you have to understand that the whole information arbitrage, the internet, will facilitate business models which are different, and a lot of them will be very profitable. I mean, I think that there are some outstanding companies in India which, whether it was Red Bus, which solved a real Indian problem, whether it was a company like Book My Show. It's not that there aren't opportunities in India. There are opportunities in India. But the economic purchasing power in India is much smaller than in lots of other parts of the world.
Right.
So the aggregate earning of these companies, one has to relate to the local ecosystem. And I think that sometimes we feel that they're being benchmarked more to global players, which is nothing wrong with that, and inevitably they will get to those kinds of numbers, but it's just money has time value, and I think that's really been an issue.
Fair point. And you know, you're not in a minority. There's a significant community that actually agrees with the argument that you've just made. Rahul Khanna, are you part of the Rahul Bhasin camp, or do you believe that given the kind of growth potential that India has and the internet revolution, we're already at 250 million internet users, and the fact is that we're probably going to go back to an 8% plus kind of growth rate over the next 5 to 10 years. Do you believe that this argument holds? It doesn't hold as far as valuations are concerned?
Look, I think the internet sector is not in a parallel universe. You know, it does exist within the Indian context, and you know, of course, growth and consumption spendings need to continue to happen. You know, most e-commerce companies have grown north of 100% this year, right? So they're not indexed to the 8% economy growth. I think China is tapped out. Global investors are looking at other big market opportunities. And in a lot of ways, this capital has nowhere else to go. Brazil may be too small. Russia, nobody's excited about.
Right.
So from an internet team perspective, you know, India is the next frontier. You know, obviously, I think there's also a battle royale for a grand play, say, in the e-commerce space between 2 or 3 big players. And there's a lot of capital invested in there. And I think nobody wants to walk away from that situation. So I think we are going to continue to see capital flow.
There is a winner or two that goes on to justify those valuations, but on average, people lose money.